Hi and welcome to Top Tips Tuesday. Jeff here from GCD Property, and this week's tip is for those looking at property investment in Brisbane and the surrounding areas. Now, there's been a lot of talk in the media recently about what's happening in the terms of the property market. Lots of horror stories about really outlandish statements that aren't really based on facts. So we've heard things from the media about property prices dropping by 15%. It's really scaring or making a lot of investors or home buyers really holding off and just really considering their decision. So I always come back to looking at the facts and what's actually happening in that local area. So if you're looking at southeast Queensland, property investment in Brisbane specifically, there's a lot of positives, and the property experts that have been in the industry a long time, forecasting very strong growth for the Brisbane and the surrounding areas over the next few years. So a number of things: we've got the strongest population growth in Brisbane's history. We've got extremely low vacancy rates. If you're trying to rent a property in the Brisbane, Gold Coast, Logan, Ipswich corridor, very tough to find a rental property, so that's a positive for property investors. Finances, interest rates are still relatively low. Sure, there's going to be some increases over the next couple of years, but the banks are already factoring that in. And based on the population growth and the massive infrastructure that's going into this region, there's a lot of people making a lot of money out of property at the moment. So as an example, coming back to the figures and the statistics, CoreLogic RP data in its latest property report around Australia showed a decline in Melbourne and Sydney, which was expected. However, Brisbane and Adelaide very strong. For instance, over the last quarter, so the last 3 months, Brisbane showed 7.2% growth. Now, on a $700,000 property, that's $50,000 that you would have made if you bought a property in the last quarter, or $50,000 you would have lost if you held off making that decision. Last month, 1.7%. So about $12,000 that probably would have increased in the last 30 days. So these are all factors you should consider when you're looking at timing and are you buying into the property market. So take advice from those that have seen lots of cycles. Bear in mind that property doesn't always go up in value. There's long periods where it's stagnant or flattening, but when it's in that growth phase, it's really important to get in and make most advantage when that market is really growing strongly. So thanks for watching. Hope it's helped in some way, and see you next Tuesday.